Michael O'Connor, Chief Executive Officer, Cork BIC from Ireland. And Petr Šramek, AI Startup Incubator founder from the Czech Republic. Applause, please.
First of all, I promise that I will speak less than my panelists. Well, our subject and the topic is about the fintech collaboration. And I think if you find a good way and solution for this, all the banks will have a simple way to work with the fintechs. First of all, I would like to introduce my panelists to the audience in a short way, please.
Okay.
Beginning with the operator.
Thank you. Okay. My name is Petr Šramek. I'm an entrepreneur for close to 30 years with multiple startups, some exits, some failures. And during the past 5 years, I'm helping startups, especially in the deep tech and artificial intelligence field. I founded AI Startup Incubator, which is located in Prague, but it's mostly international. So during last year, I have personally evaluated more than 200 AI startups, mostly early stage startups. So.
Okay. My name is Michael O'Connor from Ireland. I'm previously an entrepreneur, was a engineer. Got transformed by business and startups and the hard road to success. We exited and now I've come back and we work with early stage companies. I've worked with about 250, 300 companies. We started angel networks and in recent years we've gotten involved in private investment accelerators where we select companies in the cybersecurity, AI, deep tech space applied across wide area networks in different industries. And we select these companies from around the world. We invest in them, we grow them, and we've had considerable success in that space.
Good afternoon to all. My name is Hugo Mendes. I'm from Portugal. I am a CFO of working in Taiwan mainly, of a listed company in the automotive industry. I have been a business angel as well, mainly investing based in Portugal, and entrepreneur by myself as well, mainly in the real estate business as well in Portugal in recent years. That is basically my introduction.
Thank you. And my name is Murat. I am the president of the Fintech Park. It is a new angel investor foundation in Turkey. And basically, me and the other investors are just focused on the fintech companies and the startups. And after 20 years experience about the core banking and the payment systems, and finally for the 2 years about the blockchain experiences, I always worked with the banks as an embedded model of their one party. But with especially in Europe after the GDPR and the collaboration and especially the APIs of the banking system, the startups has a new feature and they have the new models of the business with the banks. So Mr. Matthew said that fintech is not changing the world. Yes, it's true, but fintech is changing the business models of the world right now, with especially the core banking and the payment systems. And fintech startups want to collaborating with the banks, not competing with the banks. And according to the PwC, there's a report of them and saying that there are 3 models of working with the startups and the banks. And all the panelists have experience about working with the startups. So in the fintech experience and fintech vision, how they can collaborate with the banks and how should they behave with the banks or with the other financial institutions? Yeah.
Yeah, so I have seen many examples of the situation where startups want to cooperate with banks and financial institutions, and the banks want to cooperate, and it wasn't successful. It wasn't started yet because of the so-called the gap of understanding. The most of the startups, especially the early stage startups, are technologically oriented. But the banks and the managers are business value oriented. So they don't understand to each other. So startups are presenting the technology, the vision for the future, but banks want to see on here what will be the delivered value. But it doesn't mean that there is no business value. So they just need to understand each other. So the solution for this gap, I see the importance on the both sides, especially on the bank side, to have someone who can interpret or interface this communication. So someone like an entrepreneur in residence or the specialized department where they can not just acquire the startup cooperation, but then they can execute the cooperation in the later stages, because then it will become the next step of the misunderstanding when they decide to cooperate. So the startup is not able to understand the corporate language in terms of the security processes, and you can imagine that if they need to deal with the corporate procurement, it will be a nightmare for them. So that's the very important part and the condition for the successful startup fintech cooperation.
Do you believe that, excuse me, this gap is a general feature for all the startups, not only the fintech and the banking system and the other related startups?
I think it's general, not just for fintech, but for the corporations generally, and most of the especially the early stage technological startups. If you have a more advanced startup when they are working some people with experience from enterprises, it's definitely better. But for the early stages, they have no budget for these kind of people. So but this is general point.
Yeah, thank you.
Yeah, I think what we see is that there are two different worlds: the startup world with technology and really great people, and you've got the very securitized financial world, the fintech world, banks in particular, with very rigid systems, lockdown systems, not operating in the cloud, not flexible. They're terrified of security breaches. So letting somebody else come into their walled garden is very, very difficult. So the only way in, so it's a waste of time almost for a startup to be talking to a bank in this space, unless one can get in with a consortium, a channel partner, somebody who's already trusted in there, somebody who can actually live within that securitization environment. So it's pretty vital that your go-to-market strategy actually is building channel partners and then going in with that, but very carefully and very slowly. Also, I think many banks are terrified of new technology because they know that things can go wrong, because within their existing rigid systems, that's difficult. So the other alternative is that one goes direct and in partnership, rather than going to the existing banks, goes to the alternative banks and go to market with a group like that. And some of our companies operating in the payment space are now going to market with organizations like Stripe from Ireland. And they are being a partner with Stripe in this, and Stripe is probably the ultimate acquirer of this young startup company, rather than a traditional bank. So what I'm saying is that you have to find partners if you're a very early stage tech company. You have to go to market with those partners. You have to understand how to do that and build that in. That's a whole sales process in itself. And then also, as well as the existing banking systems, consider the new banks that are coming out, both with the Googles and Apples, as well as with the independents like Stripe.
Yeah.
Just a minute. You mentioned something about our last section that I want to mention. Don't forget about the Google and yes.
Yeah, 25 years ago, Bill Gates said that banks are dinosaurs. I don't know if it was true 25 years ago, but nowadays, probably I would say. As my colleague was saying, banks mainly, most of the times, are terrified about what is going on in this fintech industry. But mainly to reply your question in a more objective way, I would say banks usually today, or wealth management firms, they use, I would say, 4 strategies to get into the space. Well, first, the most simple to understand is through partnerships. So they sign the partnership, as it has been already mentioned. This is maybe the easiest. Then it's what we call the arm's length strategy, okay? It means that basically they acquire or buy some from alternative lenders' platforms, they buy the loans to get access to that information. And then is either buy a company or either develop by themselves. It all depends on how much time and money they have to invest. Like any other investment, it's about the horizon, time horizon, and it's about the money you have to invest to develop by yourself or to acquire those competencies.
Yeah. What do you think about that? The fintech startups are saying that we are all going to the banks and telling what we are doing about our products and about other services, but the banks are listening us and then turn back and do it themselves inside their own bank company with their IT or the other related persons. What are you thinking about this collaboration way?
Yeah, I think that it's very common to understanding or the danger of this kind of a communication. But I don't think that if the startup is coming with really good thing or the disrupting technology, that the bank is able or capable to do it internally. So it could be just if the startup will come with just the idea, so maybe, but not with the existing technology. So I think that the banks, if you are talking about the strategies, so I would say they need to think about the possibility how to catch or take some position in emerging technology startup without integrating or influencing their development. So to do kind of a seed investments in like a betting on the promising trends, but not to deciding that they will use it or implement it in the future. This kind of a strategy will secure their positions for the future, so they will have a much more easy access to that innovations in some later stages after 1 or 2 years, if they will emerge or will be successful. So this is like an optionality strategy for them. So this is much better than to take the idea and try to develop it internally.
Yeah, for us, ideas are 2 a penny. And so it's what you do with the idea that's really important. So often if you go to a bank with an idea, they're already thinking about it anyway in many cases. So it's not the idea, it's actually the traction on the road to a solution. So we can give the same idea worth $1 million to 10 companies, and one will succeed and the other 9 will fail with a perfect business plan. So it's actually what you do and how you go to market with that that's absolutely critical. So we don't see that so-called cannibalization of real innovative products and ideas. And what we see is the bank actually buying the service from the startup and implementing it. And if that works, they buy a bit more and buy a bit more. And then they get other banks that they work with to do that. And we've got one situation where an AI startup is servicing one of the central banks in Europe, which is one of the first cases where that is happening in the securitization of services within the central bank infrastructure. And that was done on a global tender, and it selected a startup company to do it, simply because of the algorithms and the methods of actually putting that together in the web crawling space that they understood and they wanted to then securitize within their own network. So it's the complaints happen because the startups don't succeed, but often they are part of the contribution to that. So there's lessons to be learned from the startup to come back and re-innovate, or maybe approach in partnership with another service provider or a group of people in a consortium to a bank. So you don't take the whole slice of the deal, you take it apart.
Thank you.
Yeah, it goes back to a little bit what I was saying. It depends as well on the level of sophistication or awareness, let's say, that the bank is. Some of them have already understood the importance of it, but still we have many examples that others don't yet. So maybe the train is passing or passed already, or I don't know, for some of them probably, but others are doing very good on this space, either, as I was saying, by themselves, either leveraging through partnership or acquiring simply these technologies, and they get their toe in the water by doing that. So it all depends on again, what is their goals, the goals of the banks, and the wealth management firms as well. I put the both in the same box, and their strategy, whether they want to digitization or digitize themselves or not, because this is the big question when we are talking about banks. It's thousands of papers to open a bank account still today, and it takes hours and so on. And this is where they can't today. If they don't change or adapt themselves, they can't compete with the fintech. At least on this part, digitization is obviously. Everyone can see it and everyone can feel it when you face and you deal with the banks by yourself, you know. So I think this is the key issue, really.
Yes, definitely. On the other hand, about the banks, for example, there is a huge migration from the banks to the small startups, fintech startups, especially on the digital payment and the other services. How and the regulations open this area, as you know, for the startups. And through these regulations, do you expect that there are many services from the banks to the startups can easily move or migrate?
Definitely much more than we can imagine right now. Because in some future, for example, you can imagine that the machines will want to do the business transactions without the persons. So the previous discussion about the identity will be obsolete, because these machines will have their identity and want to make the business transaction, want to transfer the money or kind of a currency. So there will be a lot of more options and possibilities what to do, what products will be needed with their own intelligence, and these startups or the growing number of startups will provide such services, and only the best ones will survive. So the number of startups will be definitely multiple times more than the banks. So what will be the success rate? So even there will be success rate very low in terms of startups. So that still will be very dangerous for the existing banks who will not cooperate or maybe acquire such startups in the future.
If we move to, we're talking about banks, and I see commercial banks narrowing down to more of the retail space, and then the asset firms and wealth officers and organization holding assets to move digitally big time. And that's where I see blockchain with fiat currency backing being behind that, and that's going to change dramatically the flow of information and the securitization of information over time. And that will happen with the private firms first rather than the publicly quoted firms, and it will also be driven by the international firms first. Particularly it's happening already with interbank and interoffice between two organizations that sign up for it together, and they do a lot of transactions, and so they can digitize that through the blockchain methodology. So I see it going there rather than the conventional commercial banks that are all standing, moving into this space, and I see the emerging companies moving into that space and partnering up with existing delivery providers. I don't see the individual startups, unless they're very, very niche or very, very deep tech, going directly, or unless they can deliver a closed solution, going to a financial institution, such as a wealth office, directly. But I see a whole bunch of providers in there between the technology startup and the deliverer to give that guarantee to that the securitization will be okay. And I also see the cybersecurity guys being in there also, with managing advanced persistent threats at the same time. So when you talk of fintech, we see a group of things working together, being AI and cybersecurity, to deliver the startup solution.
Yeah, I was going to say that as an example, to try to reply your question, and I left China in 2013. Last year I was in China, and in those four years, basically money has disappeared. It is just unbelievable. So what I'm just willing to say is that depending on, so today you have, well, fintechs or not, or big groups, you know, Alipay or WeChat, that basically you can do whatever you want. And in those, it's just, well, we take a city like Shanghai, you know, is 20, well, at least officially 20 million, unofficially is much more than that, 20 million people. And in fact, you go to whatever restaurants, even the taxi driver nowadays, you know, I put my 100 bill kwai, and you look at me like you are not from this century, my friend, anymore. You know, no, WeChat, and it's okay, but I don't have the application and so on. So basically, even in the fake market, you know, you don't see any more money. It is unbelievable. In 4 years, you don't see any more money. Before you used to, you know, you raise your hand and you call a taxi. Now, if you don't have the app, okay, I'm just a little bit off topic on this. But what I'm willing to say is that those players, they are moving so fast. If the legislation allows them to do that, it goes very fast. And the adoption rate of these new technologies or services that are being provided is really fast. I would never ever imagine that in 4 years in China, that is have a very special connection with money people, that would disappear in just that amount of time. So really, it's the opportunities are incredible, infinite, as long as well as the legislation and the will, government will, is there.
This disappear situation makes the fintech more powerful, I think.
Oh, obviously. Yeah.
And in the final session, I want to ask about we talked about the banks in one side and the fintechs startups in other side. But for example, the Google, Alibaba, Alipay, and the other payment structures and the systems that neither a bank or a fintech company. What are you thinking about this kind of the actors?
Yeah, that's maybe the key force for the future, because unfortunately banks are kind of intermediaries between someone with coming with a value and someone with buying the value. And in the future, all these technologies advances will try to skip these intermediaries. So the banks must evolve in something more. So maybe to be close to these technological giants, even these giants will overtake their stake.
I see it, I agree with you, a consortium play, where a consortium will bond to deliver a solution. And that will be securitized by the regulator, and it would deliver that solution, light touch, and it would pick the areas of the financial system that actually are the easiest to serve, leaving the banks with the difficult problem, complex situations that can't be served. So the conventional banking system, as we know, will be disrupted. And we see quick go-to-market methods like blockchain, and failure will be tolerated. At the moment, there is, within the banking system, a view of no failure, yet fraud is rife with credit card payments, and a lot is written off. If you actually drill down into the data, there's a bunch of write-offs every day by the financial system of not worth collecting. It doesn't come to the surface in media. Yet if a bank is breached with a cyber threat or can't deliver money through an ATM, then it's a major, major problem. But it's a pinprick in the total fraud industry across the world. So what will happen is these new companies will go to market and they will have far lesser fraud than the conventional system, and that will be very powerful. And that information will then come out to the media, and that will be their marketing method. And that will be very powerful. And so suddenly they will get the trust of the new customer, who's the younger customer, who is entirely online, and their phone is their digital security device.
Yeah, as you were saying, in fact, those new players, they are already disrupting the market. As we were saying, I just gave an example. It's about data. In fact, wherever if you possess the data, then you can leverage the information and those data. And this is what we see today. What is happening with the power that Alibaba and so on, these alternative players that are not fintech or in the fintech space but not officially fintech. They are not banks, or even they have some financial institution, but they don't like it to be called in this way. They can leverage because they have already all the data from A to Z, let's say. As my colleague was saying, cybersecurity is really important. And tomorrow, if you can ensure that you are secure, transaction is fast, reliable, then you have a competitive advantage towards the traditional banks. And this is what younger generations are looking for. They are already, it's a habit for them, it's totally natural for them. So again, we go back to the adoption rate when we take how fast it goes to leverage the data, then putting the solutions in front and offering those solutions to the end user. Then it's exponential in the way that the end user is adopting it.
Yeah. Thank you very much. Do you have any questions for the panelists? Yes.
So what should be changed to have faster adoption of new start technologies by the big banks? What should fundamentally change to get this start of technology into the banks faster? What is it? Is it just the culture of the bank?
Yeah, I was exactly going to start to say that. Corporate culture is important, not only in banks, but in any company. I think it's really fundamental. And traditional banks, as the name says, they are traditional in most of the times in the way they think, in the way they manage, because they're managing money. So, of course, there is always some conservative principles and value behind because you are managing other people's money. And it has been since centuries in this way. So at the end of the day, as I was saying before, some already understood and some are going fast, and you have many very good examples. Some, they just stuck in time and can't either see it, either don't want to see it, either just want to keep doing their traditional way of doing it. And I think that's the end for them.
It depends on I think it's from the board down, and so the boards should be encouraged to have greater person on for that would drive technology strategy and innovation, and be outside of the banking system doing that. And likewise, another seat for, if it's not on already, for privacy and data management. And finally, and monetization of data, and then finally ethics, which is a critical element. And that's starting to emerge now, we're seeing, and the whole data space is what you do with the data, and the ethics with which you practice that, and what is your corporate governance around ethics.
Yeah, I would say that the banks or the other financial institution must establish a systematic approach for startup cooperation. They might set the processes, they might set the rules, and the dedicated people for doing that. It cannot be done on an opportunistic basis.
Any questions? Yeah.
My question is for Peter. Peter, I have missed your presentation. Could you summarize in a nutshell what you as AI startup incubator, what kind of AI for fintech requirement?
So it's all about the applied AI startups, early stage startups, or at least beginning with the proof of concept or the experiments or some basic products. And we have a 12 months incubation program helping them to develop it to the level of the readiness of the cooperation with the institutions or the customers, with the pilot customers, complete team, basically readiness for the scale up.
What kind of pains are you prioritizing in your selection of the startup you incubate?
So what kind of pains?
Yes. Which pains are being solved with the AI that they develop?
It's a completely wide range, so you can imagine basically anything across several sectors. We are not focused on just fintech, but all the other, including education, healthcare, marketing, and so on. So it's, but the key point is that the successful startups or the promising startups are addressing some niche problem or niche opportunity. So that always is the problem with the startups trying to build a new bank or to do some general service. So if they are very focused, and they are the best or one of the best on the world, so then it's promising.
Okay, then I think we should thank. All right, thank you very much.